Welcome to another RES Wave update. Okay, so now that we've let this US 30 Dow Jones chart unfold a little bit more, it is time to reevaluate the situation. We know that this thing's just basically a really stretched out zigzag, type 2 expanded zigzag. However, we have to take into consideration that this D wave was probably really big because what happened in Bitcoin, and basically that is very similar to what we're seeing here. We're seeing the D wave act like the impulsive move, which is why I haven't really said anything about pulling out of this yet, although you could take profit from the levels that we got in. It's up to you. You can decide that, well, you know what, we got in around here somewhere. I think it was like 31,000, and I expect this to fall back down here to about the bottom of this channel, right? And this is a very specific RES wave channel, which basically is taken from the start of the A wave and to the where the E wave ended for the B wave. Okay, now normally we should have taken profit up here, but to be honest with you, this is such a stretched out market that I don't think this E wave's going to be that much more disastrous than what it's looking like. Simply put, I think it's just going to create a 5-wave move, which I'll get into in a minute, and then it'll finish off the B wave. The B wave, which I thought was here, was merely it wasn't the B wave that was the, like, this is the A wave, and then I've got a B here. So this is actually the B wave of this particular D wave. Because it's so large, it's like, what the hell's going on? So that's A, B, C, D, E, and then you got your C wave. Now, the A and the C are similar in length. So I'm inclined to think that this is actually a correct count. Now, we all know that if you've been following me for a while, we know that this particular wave was just ridiculously hard to understand. But due to the stimulus of it, I believe that the B wave expanded, and then we had that final move. So just to clear that up in terms of what I'm talking about, and we're using hindsight Harry here because of what we're seeing lately to just sort of drill down on the what ended up being this move, right? So the first 5 waves occurred around this area here, right? 1, 2, 3, 4, 5, somewhere around here we saw a 3-wave move. So to me, that's the first part of the zigzag, the A. Okay, so that's the A in brackets, and then for the B in brackets, we saw a 3-wave, an A, B, C, and what appears to be a D wave, and then an E to end the B wave correction, and then we simply saw the C wave do that. So it's a very, very, very weird D wave, but when you're talking about an expanded D wave within a larger D wave, well, you can see why it's easy to get mixed up with your analysis, right? But we're using the approach that basically we're looking at a lot of other different things going on, like Bitcoin and the US dollar, right? So the US dollar chart, I am going to put out a separate video on that one because I don't want to make this too long. But it kind of indicates that, yes, we are going to see another move up. And I'll explain what I mean in just a moment when I get rid of these lines. Okay, so basically what that means is that the A wave, right, ended here and the B wave ended here. So that's a straight line. That's not a, that's a, how can I say it? It's a type 1 expanded zigzag, because the B wave ended around the same area as the A wave. So that adds further credence. Using Arias wave, the methodology, this is one of the variances of a zigzag, right? When you have the B wave end around the same area as the A wave, even though it's expanded, it went down, it went up, it still came back to that area of significance. So that means we are looking for 5 waves up in C wave of the D wave of the B wave. I know that it can get really like complex to understand. Obviously, you need to learn the program to truly grasp what I'm trying to say here. But that's why I kind of color coded the D wave waves all in blue rather than giving them their unique colors, which I give waves. So that basically explains that what we've seen is still a D wave. So what we're seeing now is an E wave, which is the final move of the B wave, which means that then we're going to see that C wave, which is going to equal the length of this move from the beginning, right? Now, no doubt this is going to be the entirety of this move. Sorry, one sec. The entirety of this D wave will be a type 2 expanded D wave, because the B wave would have ended nowhere near the end of A, if you can understand what I'm saying, right? So there's two kinds of zigzags. Ones that kind of aren't so expanded, I call them type 1s, and then you've got the zigzags that are fully expanded, way more expanded, and those are type 2 zigzags. So we can't give you a real price estimate, but I'm going to go with Martin Armstrong on this one. I really do believe DOW is going to test the 40,000 area, right? So in terms of my long trade idea, I mean, you can take profit and go back in, but you know, it's up to you. Like you should learn the waves yourself, so then you can make your own informed decisions. But I don't think that it's going to go too much further, and I'm going to get into that in a minute. But let's just say that the E wave ended here. That's still above where we got in, around 31,000. Okay, and that's why I have this particular line here to indicate roughly where we got in. Let's make it green. Okay, just for the sake of illustration, we got in around here somewhere. So if this market goes down to here, you won't have been stopped out, and then we're going to expect that move to go to 40,000. Okay, now this is starting to really add credence to the whole Bitcoin to 200,000 idea and the XLM to $55 idea, because we have not seen the impulsive move fully begin. And you got to ask yourself, why hasn't it started yet in the cryptos? And that's because these markets, they kind of track each other indirectly. They kind of move in similar ways. So basically, when you get all of these markets completing their corrections, which in this case, it's a B in brackets correction, you're going to get that impulsive move that's going to finish off the move, right? So that's why, even though in the cryptos we have seen the end of the B wave, it's kind of like it's in a holding pattern. It's kind of like it's delaying. It's causing how can I put it, a, a diversion, right? It's trying to it's basically getting ready to rock and roll. So this is really good. This is a timely update. Thanks for suggesting that I cover this again. I've been thinking about it, MW98. I've been thinking about it, and I've sort of just been pondering on it and sort of thinking about it in the back of my mind. You should see what's in the back of my mind. There's all sorts of charts and analysis going on there. But this happens once you learn RS wave because you start to sort of, your mind just goes into overdrive, and it's great. It's good. It keeps you occupied. Stops you thinking stupid thoughts. These days, it's very easy to start pondering on stuff that really is useless and won't really get you anywhere. But uh, so moving into that area now, that drop that's in progress, let's go to the hourly chart. We may have to drill a bit deeper than that, but you can clearly see that there's a 5-wave move to the downside. So some people might be thinking, okay, well, this is a top. Let's short this. This is going to keep going down. No, I don't think that's going to happen. I think what we're seeing here is a 1, 2, 3. There's going to be a 4 and potentially a 5 to finish it off, right? It could be around that line, could be just above it, could be just below it. I don't know where it's going to go. I'm just giving you a rough estimate as to what this is. This is an E wave. So E waves are the last move in corrective patterns, whether it's wave 2, wave 4, wave B in brackets, right? I've explained this in my Q&A as best I could, but it's an ongoing process. The best thing you can do is just to learn RS wave. It's so much easier, right? Because if you want to go through every single video, take a million notes, and then do just all this back testing, if you don't believe it, then go ahead. You might actually figure it out, because it only took me 6 years to really perfect it. But I'm just trying to give you a head start here. Time is precious. We're in a really critical time right now. So you want to understand what you're doing. You don't want to just follow someone blindly on the internet, because you need to have that peace of mind and confidence in yourself, so that when you see these weird moves, you don't freak out and just go selling or panic buy, panic selling. That this is what the majority of people do, and that's what causes crashes and buying climaxes, as Steve Nissen calls them, right? So, and by the way, Steve Nissen is the guy who brought candles to the Western world. Candles, Japanese candlestick patterns. That's why these days you have Japanese candles on a chart, because they used to be bar charts. Just in case you didn't know, just a bit of a fun fact there. I'm just obsessed with everything to do with analysis and what other people have done before, because it's important to know what are the origins of what people have done in terms of technical analysis. And I'm not saying I use them exclusively. To me, it's all about the waves. You know that already. I don't need to get into detail. So let's just look for the complete 5-wave move down. So then we can call this the end of wave E, the end of wave B, and then finally we will be looking for that last impulsive move, which should basically complete this pattern, right? Now you saw, I've already explained how this A here is equal to this C here. So you can see that this is how it works, right? Hopefully you found this video interesting and informative. Thank you for watching.